All right, let's dive right into some fresh financials, pretty much hot off the press.
Yeah, we're digging into Oracle's fiscal 2025 results, the Q4 and the full year.
Exactly. They just released these today, June 11th, 2025.
And this is a direct look, right? Straight from their official press release, we're not bringing in outside takes, just what Oracle themselves put out.
That's the plan. And our mission today, really, for you listening, is to unpack these numbers.
Figure out the key takeaways.
Yeah, what really matters. And what's the leadership saying about where things are headed, especially, based on these results.
We've gone through it, so we'll walk you through the story it tells, hitting the highlights, the figures, the statements that really jump out.
Okay, so let's start big picture. The full fiscal year 2025 that ended May 31st. What did that whole year look like overall?
Well, for the full year, Oracle reported total revenue of $57.4 billion.
Okay.
The source tells us that's an 8% increase year over year in USD, or 9% if you look at constant currency.
And their big focus area, cloud services and license support. How did that do?
That segment, it came in strong, $44.0 billion for the full year. That showed solid growth, 12% growth, actually, both in USD and constant currency.
12%.
Okay.
And the cash they're generating.
Operating cash flow for FY25 was $20.8 billion, also up 12%. And their free cash flow, if you look at the trailing 4 quarters, that was $11.807 billion.
Got it. And they always give GAAP and non-GAAP numbers. Any quick note on that for the year?
Right. So non-GAAP earnings per share for the year was $6.03. That compares to $4.34 on a GAAP basis.
Quite a difference.
Yeah, and the release makes it clear, that management uses those non-GAAP figures. They back out things like stock-based comp, amortization. They see it as a key way to look at the underlying business performance.
Okay, useful context. So that's the full year snapshot. But, often the most recent quarter tells a more immediate story. Maybe shows things speeding up or slowing down. What about Q4?
Right, and Q4 ending May 31st. This is where things get particularly interesting.
Oh, yeah.
Total revenue for the quarter was $15.9 billion. Now, that's an 11% growth rate, both USD and constant currency.
So faster than the 8-9% for the full year, an acceleration.
Exactly, an uptick in the growth rate just in Q4.
And their key cloud revenue within that quarter, the IaaS plus SaaS number.
That combined cloud revenue hit $6.7 billion in Q4. And here's the really striking part. The growth rate for that segment in Q4 was 27% year over year.
27%. Wow. Okay, compare that to the full year number again.
The full year growth for that whole cloud services and license support bucket was 12%. So seeing 27% growth just for the IaaS plus SaaS piece in Q4, that's a big accelerator.
It is a big jump. Okay. And what about that other metric, the one that looks forward? RPO. Remaining performance obligations.
RPO, basically contracted future revenue. That saw, a dramatic increase. It surged to $138 billion at the end of Q4.
$138 billion.
Yeah. And the release says that's a 41% increase compared to a year ago.
41% jump in future contracted revenue. That definitely signals strong bookings.
It does. A very strong signal on future business.
And the bottom line for Q4, earnings per share.
For Q4, GAAP EPS was $1.19. The non-GAAP EPS came in at $1.70, and non-GAAP operating income was $7.0 billion for the quarter, which was up 5%.
Okay, let's dig into that 27% cloud growth in Q4 a bit more. You said it's IA plus size, infrastructure, and applications. Where did that acceleration really come from? Was it balanced or?
The press release breaks it down. Cloud infrastructure, IaaS, that's the, renting, compute, and storage part, that was $3.0 billion in Q4.
Okay.
And this is where you see the most pronounced acceleration. It showed really strong growth of 52% in the quarter.
52%, just for infrastructure.
Just for IaaS, yeah. Remember, the full year IaaS growth was 50%. So hitting 52% in Q4, it shows that momentum is building, accelerating, even from an already high base.
Wow, okay. 52% in infrastructure. That's clearly a huge driver. What about the other piece, the applications, the SaaS side?
Cloud application revenue, SaaS, that was actually larger in absolute terms, $3.7 billion in Q4. It grew at a solid, but, more moderate 12%.
Still solid, but not the 50+% range.
Right. And within SaaS, they highlighted a couple of things. Fusion Cloud ERP hit $1 billion in revenue for the quarter, up 22%. And NetSuite Cloud ERP also hit $1 billion, up 18%.
So good growth in the big ERP apps.
Definitely, good growth there. But it's clear from these numbers that the overall cloud acceleration in Q4 was heavily weighted towards that infrastructure side. That 52% IaaS growth is really pulling the average up.
Okay, that makes sense. We see the numbers, we see the acceleration, especially in IaaS. So the big question is, why? How does Oracle's leadership explain this? What's the strategy driving it? And what do they see coming next?
And this is where the commentary in the release from the executives really connects the dots. Safra Catz, the CEO, she made some pretty strong statements.
Like what?
She noted that, yeah, fiscal 25 was a very good year, but then she said she expects fiscal year 2026 growth rates to be dramatically higher.
Dramatically higher. That's confident language.
It is. It suggests a real step change expectation.
Did she put any specific numbers around that for FY26?
Yes, she did. She specifically projected total cloud growth, so IaaS plus SaaS combined to accelerate from the 24% they saw in FY25 to over 40% in FY26.
Over 40% total cloud growth.
Okay. And even more striking, she expects cloud infrastructure IaaS growth, which we just saw was 50% in FY25 and 52% in Q4. She expects that to accelerate further to over 70% in FY26.
Over 70% IaaS growth next year.
That's the projection. And remember that RPO number that jumped 41%?
Yeah, the $138 billion.
She expects that to grow by over 100% in FY26, essentially doubling again.
Wow. Those are incredibly ambitious targets. Doubling RPO, over 70% IaaS growth.
Absolutely. And she tied it back to their strategic goal, saying they're on track to be, quote, the world's largest cloud application company, AB, one of the world's largest cloud infrastructure companies.
Okay, huge ambition. So how are they planning to support that kind of infrastructure growth? Did Larry Ellison, the CTO, give any specifics on that?
He did. Larry Ellison focused specifically on the infrastructure expansion. He talked about multi-cloud database revenue. That's, connecting Oracle's database across different clouds like AWS, Azure, Google Cloud.
Right, running Oracle DB everywhere.
Exactly. And he said that specific segment grew 115% just between Q3 and Q4.
115% quarter over quarter?
Yes. And he gave numbers on the build-out. They have 23 of these multi-cloud data centers live now, and they're building 47 more in the next 12 months.
47 more. That's a lot of capacity focused just on that cross-cloud capability.
It is, and based on that build-out and the demand, he expects that triple-digit multi-cloud revenue growth to just keep going through FY26.
Okay, so multi-cloud is one specific driver. Anything else?
Yeah, the other one he highlighted was Oracle Cloud at Customer. That's where they put their cloud gear right inside a customer's own data center.
Right, for regulatory reasons or latency.
Yeah, exactly. And he said revenue from Cloud at Customer grew 104% year over year.
Another triple-digit grower.
Yep. And again, build-out numbers. 29 of those dedicated Cloud at Customer regions are live, and they plan to build another 30 in FY26.
So significant expansion there, too. What about just the general OCI platform usage?
Overall OCI consumption revenue, he said, grew 62% in Q4. And based on the demand they're seeing in this massive build-out plan, he expects that growth to accelerate, too, to grow even faster in FY26. He used the phrase skyrocketing growth rates.
Skyrocketing, okay. So the leadership is clearly pointing to very specific, large-scale infrastructure build-outs, multi-cloud, cloud at customer, general OCI capacity as the engine for this dramatically higher growth they expect.
That's the story they're telling, yes.
Now, if we look back at the actual financial statements in the release, can we see the evidence of this massive investment? Does it show up in the numbers?
Oh, absolutely. It jumps right out, especially on the balance sheet and the cash flow statement.
So
on the balance sheet, look at the line for property, plant, and equipment net, their fixed assets. At the end of fiscal 24, it was $21.5 billion. At the end of fiscal 25, it was $43.5 billion.
More than doubled in 1 year.
Yes, almost exactly doubled. A huge jump in the value of their physical infrastructure assets.
That implies a massive amount of spending. Does the cash flow statement confirm that?
It does, very clearly. Capital expenditures, CapEx, the money spent on building things like data centers was $21.2 billion in FY25.
$21 billion. And what was it the year before? FY24.
In FY24, it was $6.8 billion.
Wow. So they more than tripled their CapEx spending year over year, from under $7 billion to over $21 billion.
Exactly. It shows very directly in the cash flow. The sheer scale of the financial commitment behind that data center expansion Ellison was talking about. The money is definitely being spent.
That level of investment certainly aligns with the narrative of betting big on infrastructure to fuel future growth. Any other interesting tidbits from the financials?
Well, the company also declared its quarterly dividend, 50 cents a share, that was noted. And it's probably worth mentioning, just for completeness, while the cloud services are accelerating so strongly, the release does show that some of their other more legacy segments, like hardware revenue and services revenue, they were actually slightly down year over year.
Right.
And the cloud license and on-premise license revenue, that growth has slowed down quite a bit compared to past periods. It really reinforces that the growth engine, based on everything in this release, is firmly shifting to their cloud offerings, and particularly that infrastructure piece.
Okay, so let's try and synthesize this. If we bring together everything we've pulled directly from this Oracle press release, the full year numbers, the Q4 numbers showing that clear acceleration, especially in cloud infrastructure.
Right, that 52% highest growth.
The huge jump in RPO, that 41% increase.
The leadership commentary talking about dramatically higher growth next year, targeting over 70% for IaaS.
And then seeing the massive investment, tripling CapEx to over $21 billion, showing up in the financials. What's the core story this release is telling us?
I think the core story painted by these documents is that Oracle just finished a pretty good fiscal year 25, but that final quarter, Q4, really marked a significant acceleration point for their cloud business.
And that acceleration was overwhelmingly driven by the infrastructure side, IaaS?
Yes, overwhelmingly. And it's happening right alongside, and you could argue because of these massive investments they're pouring into building out data centers and expanding those specific offerings like multi-cloud and cloud at customer.
So the executives aren't just reporting history. They're explicitly linking this huge investment and the current demand they see to these very ambitious growth expectations for FY26.
Exactly. It feels like, based purely on this release, they're making a very public, very large-scale bet that this infrastructure expansion is going to pay off big time in the coming year and beyond.
And just to reiterate for everyone listening, all these insights, all these figures, they're drawn directly and only from this June 11th financial results press release from Oracle.
Absolutely. We're sticking strictly to the source material provided.
So wrapping up this deep dive, the core insight really seems to be Oracle is leaning hard into expanding its cloud infrastructure. The Q4 numbers, the 52% IaaS growth, the 41% RPO jump, tripling CapEx, they look like significant early validation of that massive bet.
Which leaves us with maybe a provocative thought for you to consider, based only on what's in this release. You see the aggressive build-out plans from Ellison, you hear the specific, dramatically higher growth targets from CATS for FY26. If they actually hit those numbers, especially that 70% plus IaaS growth and 100% plus RPO growth, what does Oracle's cloud business, particularly infrastructure, even look like just 1 year from now? It's quite a potential transformation hinted at in these results.